I've been through 2008. I've been through like 2015. Like I've been through like quite a few, like 1997s in this side of the world as well in Asia. I would say we're almost due for another big crash in the market. A lot of people have been seeing crypto as a hedge to like inflation. It have low correlation with like other financial instruments. I think we're still in the alpha phase where like there's a lot of outperformance because it's a new technology, right?
For the next, let's say, a year to a year and a half, what do you think are the biggest macro risks and maybe the biggest potential bullish catalyst for the crypto market?
Everyone's have their own theory these days.
Hello everyone, my name is Valdrin Tahiri and I'm an analyst for CCN. And today with us we have Mr. Kevin Lee, the Chief Business Officer for Gate, and we're going to discuss about the recent crypto market movement and how it ties with the larger macro picture. So Kevin, thanks for taking the time to do the interview with us.
Yeah, thanks for having me.
Yeah, okay, so let's start with some first question, introductory questions. So you have said before that the US-China tariff escalation was one of the key drivers of the recent volatility. Do you think this sort of represents a shift where markets are now more tied to like traditional macro events like tariffs and rate decisions?
Yeah, 100%. I mean, like the whole idea of what we progressing throughout the years in crypto market is about like we want to go mainstream, but inevitably when you go mainstream, you will be affected by the mainstream factors in the world that also affect other financial instruments. So I guess as the markets mature throughout the years, we will see that we're more prone to like the effects of like geopolitical tensions, like tariff, as you said, interest rate. We may talk about it later, etc., etc. So like we not being exempt from like these factors, we will be just the same as other financial instruments, but as a good sign, meaning that we're having that mainstream adoptions and affected by the mainstream factors.
Yeah, that makes sense. And as a follow-up, do you think that in the future crypto will even become more correlated with, let's say, equities and bonds, or it will sort of retain its role as a more maybe uncorrelated asset?
Yeah, it's a good debate in the last couple of years. I'm sure that a lot of people have been seeing crypto as a hedge to like inflation, is a hedge of like a high risk asset. It have low correlation with like other financial instruments. My view is maybe a little bit different. I would say the correlations with equities and riskier assets in the market will become higher and higher. The reason that we don't see the correlation is as high is because like the industry is still growing, right? So there's a lot of like if you break it into the very fundamental finance 101, there's the beta, which is the correlations, and that's the alpha. I think we're still in the alpha phase where like there's a lot of outperformance because it's a new technology, right? We don't see where it's going to stop, but as it again, like the last questions, as we're going more mature, I would say we will be more and more correlated to the equities market, less like bonds, because like obviously bonds market is more like a less like a risk averse market. I think at the moment, like we're at like 0.86 beta already, the correlations with equities. Yeah, we'll see. Like I would say I would even speculate in a time where we become so mature, but because it's fundamentally so much riskier than equities, we may have like a beta larger than 1. So we will be more sensitive to all these factors, even more so than the equities market.
Okay. Just in general, I mean, I know there are benefits and drawbacks to this, but do you think this will be a good thing or a bad thing for crypto if it happens? Because obviously it could be a good thing because it means that we're more mature, but on the other hand, wouldn't like crypto kind of lose its purpose as sort of a hedge against other traditional things?
Yeah, I mean, a hatch is a very vague word, right? So, like, I mean, going back to the beta and alpha, it's it's uh, it's a man-made definition of like how you're looking at the price appreciation, right? By the end of the day, if you look at the whole picture, it still have a really different trend against like equities or bonds or everything, and like a lot of people in a very traditional finance way would say it, if you put 5% of crypto in your portfolio, it will always diversify and it would always like make it like healthier in terms of the risk and return curve because of the modern portfolio theory. I mean, everyone knows that. It just like whether or not by the end of the days, like how are you going to position yourselves? A lot of people, like the audience that we're talking to, they may have like 80, 90, 100% of the portfolios in crypto. Then for them, that would be a problem for sure. I mean, I'm coming from a very traditional finance background, so I'm always for the idea of diversifying your portfolio, your basically your bag, right? And I believe that it's not the market will be a problem for the industry, but individually, how you're looking at the market and how you tackle it will be more important.
Do you think in general macro events like tariffs are more susceptible to cause volatility in crypto, or something like the Fed, which I guess should have a bigger effect?
Yeah, I mean, like for the rate cycle, I mean, it's pretty established that it's will release it was ease off the liquidity in the market. It's the whole capital market, not only on the price of individual tokens, it's also help with the VC to have like more liquidity, more capital to deployed into new projects as well in our space. And same goes for equities and other risky financial instruments. But that's you made a very good point about like pricing in. I think that's the market because of like how established it is, like how people is like making already daily predictions about like the probability of how much of a rate cut's going to be, or if it's going to be a rate cut. I think the market, as we see, is like quite efficient into pricing in those macro events. Uh, the other question that you asked is like tariff. Tariffs is like, yeah, it's more like a event driven price discovery. But at the same time, the good thing is like whenever the tariff happens, may it be like from Trump or like someone else, if it happens on a Friday evening, which happens quite a bit as we see, crypto is actually quite easy to price in because like we open 24/7, unlike where like there's like equities market, you have like bank holidays, you have weekends, you have like more uncertainty around that, so like it's actually will bring more volatility. So this is a different kind of volatility. It's like because of like the price, the event and the price discovery being like so far apart, there's a volatility. For the crypto volatility, what that we will talk about is about like how sensitive it is to those events. So there's two different kind of things, but I guess we in a very good position to at least if it's going up or down, at least it won't be like a volatile market. It will be a very efficient way to find the news price levels.
Yeah, that makes sense. So just staying with the volatility angle, how much of the October 10 crash do you think was, I guess, let's say, structural weakness, maybe like gaps in the order books or just a fragile market structure? And how much was maybe a macro-driven thing?
That's a good one. That's like, I mean, like everyone's have their own theory these days. I would say it's a perfect storm with a combination of like a few things. Obviously the macro is one big thing, as we all know. There's also like the market has been over leveraged for quite a while now. Not now, but like just before the event. So there's definitely like a deleverage, de-risk exercise among the whole market. It's not helping that some of the exchange would have like capacity and throttle and throughput problem. So making like some of the tokens being depacked from the underlying, which cause not a small scale panics around those tokens. So it's everything, and also people like seems to like forget that also at that time is actually China's just coming out of like the Golden Week, the National Golden Week. So historically it's always been like that because like how much flows, like again it's like a difference price discovery between the crypto market and the equities market. Equities market's been stopped in outside of the world in China markets for like almost a week, versus like crypto markets been going on, but like probably less liquidity during those times. So yeah, so it's, I would say it's a perfect storm with we can't point the fingers to a single factors, but it's a combination of like quite a few things.
Yeah, so I guess would it be fair to say that, let's say, some sort of macro shocks such as that kind of exposes like fragilities in the crypto market, just creating that sort of perfect storm of things?
Well, yeah, but like macro is definitely like one factor that triggered like what we have right now, like or like 2 weeks ago, where it's like the market's been over leveraged, but like at the same time, like any other things can trigger it as well. The market's being unhealthy with the level of leverage that we see was itself is more like a fundamental problem, and the macro is more like the trigger. I would say like now the market seems to be like less leveraged than before, and like if we have like similar kind of macro events, I would not expect the market will be reacting with the same scale. I think that's fair to say. And by the end of the day, everything's whole constant. What we're seeing is like Bitcoin still like holding about like 110,000, right? 110,000 right now, which is not a bad level. This is not like a financial crisis kind of scale of like corrections. So I would say yes, macro definitely would be a factor going on for our industry right now. But for the better, it's make the corrections more efficient.
Yeah, thanks a lot. And if we have Fed rate cuts, which we will most probably have, and get like more liquidity in the system, do you think that extra liquidity will, I guess, translate into deeper order books, or maybe just go into speculative leverage? And on that point, do you think exchanges have a responsibility to like strengthen the market structure instead of leverage, or do we go with a, let's say, like free market, people can do whatever they want, we're just here to like maintain the structure?
Very, very good questions. I think the first part of your question is like whether or not it will translate into like a better liquidity. I would say partially it will, but the rate cut itself would not fundamentally change the liquidity in the market. I would say a lot of like the liquidity we see right now is just like for market maker, which will be like quite agnostic to the rates schedule. But at the same time, so what we see is like we see more and more. As we see, as we've been saying for like so many years now, we're talking about like institutional adoptions. I think that would be a proper shift of like market liquidity, from like what we see right now to like maybe like different, like a degree of magnitude higher and better, with institutions coming in. Now the second part of your question is whether or not like exchange should have that responsibilities. I would say 100%. But you also answer part of the question as well, is like, do we allow that kind of freedom for people to choose? So yes, I would say, excuse me, now in crypto the market's being so big right now, and the spectrum of people with like different appetite are so wide. Like we're talking about like people like I'm very old school. I never actually do any leverage in my life. I'm just like really really conservative kind of like investment. Um, that would work well. Like institutions, like they were coming in, they would not ask exchange for like 50-time leverage, 100-time leverage. They would ask for your license, your compliance, your due diligence. So we do that, right? So like we will have to cater a part of that sector for sure. But at the same time, there are markets for those like really high speculations. I'm not talking about people who should put in like 100,000 into like a 100 times leverage, but like people would like it. But I don't know, like I can't put a number on it. It's like $10, $100. They want that thrill, right? Or they have the need to bet on that market. And by the end of the day, the market with the technology that we have right now, it's not up to the hands of like a centralized exchange anymore, right? We have seen already a decentralized perp DEX, so you can do those kind of leverage on DEX already. So what we can do as an exchange, we will provide like all the risk disclosure, like all the risk control, like your stop loss, your margin levels. I'll give you like all different kind of notifications at different threshold, so that you can make like educated decisions in a very efficient way through the apps, through the website, through the APIs, so you can manage your risk properly. But by the end of the day, it's just your own risk, right? So like what we can help is only provide you the tools, and you will have to manage it.
Oh, yeah, thanks a lot. Yeah, I agree with that, by the way, also. Like, I mean, users can, even if, let's say, one certain exchange doesn't, like, provide such high leverage that will only cause, like, users to go to other exchanges or maybe even perps or something, because, like, it's crypto, so if you want to go high leverage, you will always find a way to, like, go 100x, obviously.
Exactly.
Yeah. But in events such as these, do you think that an exchange like Gate or maybe the industry at large, do you think there are any lessons that we can take from the October crash about, let's say, maintaining the resilience of the market?
Yeah, so for us, like we were working like almost overnight. Like I remember it's like, well, it's less about overnights, but like very early in the morning actually. So like we have to look at the like everything like as I said, it's not only the market but also from the technological levels. Like it's almost a miracle that our uptime we're up for the whole time. Um, I'm coming from like banks, whereas like equities market open like 6 hours a day, and we close for the weekend. But like exchange, not only for Gates, but like for all the exchange, I would have to give like a big kudos to everyone's on the tech side to make it 24/7. Going through the whole year, uptime is amazing. So what we do is like we evaluate like our capacity, our throttles, our throughput, like some of the elements, like maybe it's like a UI elements. You don't see the handlebars moving, but like the engines, the matching engines actually working well. That would undermine the user experience as well, because they would panic. They would know they don't know if the market is actually moving or not, right? So like this is like more extended kind of like improvement and enhancement that we have to do. Um, for the users again to have like a better way, like more informed and more efficient way to trade. Um, and yeah, I mean, uh, the market is what it is. It is what it is. We have ordered, the tools for people to manage the risk even when they're asleep. I think the market in general still need a long way of educations. That's what we also do as well. We have Gates Research and Gates Learned for free for people to do their own research. I know this is a famous last word for a lot of people, but they really have to just like dig into those kind of like when you're doing leverage, do you know like what's the associated risk? Very similarly, when you're trying to trade some of the altcoins, like what's the like value propositions when the market's going up? Are they just like, as you said earlier, are they just like correlation to Bitcoin? That's why they're going up together. And when when it's coming down, they will be the first to come down because they are not like they're altcoin, they're not main coins. I think these are the lessons that we as an industry we need to learn together.
Yeah, that makes sense. Thanks a lot. Okay, so I guess for the final question, uh, for the next, let's say, a year to a year and a half, what do you think are the biggest macro risks and maybe the biggest potential bullish catalyst for the crypto market?
Ooh, it's a very good questions again. I think that the biggest risk is like the I would say this is like quite a sensitive topic, but I would say uh, in a very compliance friendly way to answer you, whatever the risk that we see in crypto market that's affected by the macro, it would be so big that would affect the whole equities market and the whole financial ecosystem as well, as we know. I think, very unfortunately, I've been through 2008. I've been through like 2015. Like I've been through like quite a few, like 1997s in this side of the world as well in Asia. Um, I would say we're almost due for another big crash in the market. I don't have the crystal ball to see what kind of macro would cause that crash. Everyone's just saying like it's just like a Mr. Hindsight kind of like analysis. But I would say if that thing's gonna affect cryptos, it would affect unfortunately everyone's, including the traditional financial market. Um, yeah, but the second part of the questions, I think is more. I want to end this with on a higher note. The second part is about um, development, right?
Like, I guess the opposite, maybe potential bullish catalysts that would like
Oh
cause
yeah,
the
bullish. Yeah,
market to
yeah, yeah. I
extend a
want to. I
little.
want to go with like a higher note, like a to wrap it up. I would say um, two things. I said it quite like actually quite actively at the beginning of the year, or actually it was the prediction for this year. Is like it would take just only one or two developed country to actually publicly saying they will put bitcoins or other cryptocurrency as the treasury reserves. There will be a national level of FOMO for all the countries to follow, and that would be a big shift of a narrative, bigger than like events for a corporate putting in into to the corporate treasuries, right? I think that would happen sooner than we imagine. And that would be a really, really bullish signal. The other thing is we're still quite far away from the global adoption rate. We're talking about 5 to 8%, depends on which research that you're looking at. We still have more than 90% of the world's like not touching crypto just yet. And that would not be the effort coming just from the crypto industry. I think it would take either the banks, the payment rails, it could be like Apple Pay or Google Pay. They already have reached to billions of users. To bridge the gap. So like if banks coming in and making crypto agnostic to whoever actually spending the money, that would be huge. Very similar to all this payments gateway as well. So these two, I'm very hopeful. I'm very optimistic about our futures in the industry, and hopefully these two events would happen sooner than later.
Awesome. Well, thanks a lot, Kevin, for taking the time to do this interview. Like your answers were very helpful and informative. And yeah, I wish you the best of luck, you and Gate, in the future.
Yeah, thank you very much, and thank you for having me. Have a very good weekend.